Hello, young traders. Doing Shabbat here from DRFX, Swing Trading Mentoring. Going to be taking a quick look at the Euro Canadian dollar currency pair, which could provide us with a trading opportunity sometime this week, as it appears to be forming a small consolidation setup on its daily chart and forward chart that could provide us with a trading opportunity to trade this currency pair bullish over the next couple of days. Again, as you have seen with my previous videos and my analysis and my trading, everything is done within the context of consolidation setups. So we're either going to be trading between the boundaries of resistance and support, where these have already been formed and completed, or we're going to be trading the early set of bullish and bearish waves that lead to the formation of these consolidation setups. Overall objective is that once a trading opportunity has been identified within the context of these consolidation setups, the goal is to capture a trading gain of between 50 and 70 pips within 24 hours using the signals and patterns provided by the daily chart and the forward chart. Now here you can see on the daily chart that the market appears to have formed a pennant consolidation setup with these boundaries of support and resistance being completed over the last several days. So what is taking place now is that the market recently provided a bearish movement that took us just above this support boundary. And what I think would be taking place now is that the market would be getting ready to start a bullish movement back to resistance. Now, as part of that expected rally, what could also be taking place is that the market could also be forming a smaller consolidation setup within this larger consolidation setup. So what is possible is that the market could start a rally here and would take us towards this area here and hit the resistance boundary of this smaller consolidation setup, and would coincide with also hitting the horizontal resistance boundary of this larger consolidation setup. Now, taking a look at the forward chart, you can see that the market has already started the rally, but even though the signals have been bullish, I would not actually be too convinced to actually start trading this now, simply because of the fact that these signals are fairly ordinary and could easily reverse, especially because of this weak area here. So the market did reverse and has started the rally and has basically taken out these last set of bearish candles, but the weakness of this area here is indicating a weak setup. And the candle that has been formed here so far is not the strongest either. So I prefer to wait until the market provides us with another signal, either higher up or after a brief pullback, that is more convincing and stronger, and which would be more likely to lead to the movement towards this area here, where we would be aiming to capture a trading gain of between 50 and 70 pips as it heads back towards this resistance area here. So based on the signals provided by the daily chart and the forward chart, it looks as if the market could be forming a smaller consolidation setup within the context of the larger pennant setup that has already been formed on the daily chart. That it would be heading towards the resistance of the smaller setup, and we would be aiming to trade this movement either after the market has provided us with a daily signal, or if the market provides us with a strong enough signal on the forward chart, then we can trade that signal towards the resistance boundary. So in other words, if the signals on the forward chart continue to be weak, then what we would do is to wait until the daily chart provides us with a signal. Daily charts can provide us with strong signals even though the setups or the candles on the forward chart are fairly weak. However, they can't be that weak. Said another way, if the daily chart provides us with a signal, a bullish signal, that closes convincingly above this bearish candle, by the time it provides us with that bullish signal, that strong bull candle, it is expected that it is hoped that by that time the forward chart would have formed and provided us with a strong stop loss area, a strong setup that would allow us to place our stop loss at that area. So the forward chart can provide us with strong stop loss areas, even though the candle itself may be too weak may not be the ideal in terms of actually trading it. So, and of course, on the other hand, we can actually have a strong stop loss area on a forward chart, but the candle on the forward chart could actually be too large to trade it. And so we would need a daily chart in order to be able to justify the trade. So of course, once the signal is provided, we would then aim for a trading gain of between 50 and 70 pips to hit that resistance boundary and provide us with another trading gain as the market provides us with these types of movements, which are the types of movements that we're going to be aiming for on a more frequent basis. That will allow us to earn larger returns per trade, and as well as more trades per week and per month. Of course, we're going to be using the accurately drawn resistance and support areas that would act as the areas that we're going to be aiming for in terms of our trading target. Stop loss on the forward chart is going to be used to protect the trade. And for the most part, we're going to be holding the trade for 1 day to capture the trading gain of between 50 and 70 pips. But if we're trading a setup that allows us to target a trading gain of between 70 pips and 100 pips, then we would extend the holding period from 24 hours to 48 hours in order to be able to capture that larger pip movement. Of course, very important to never monitor the trade until the trade has been closed, because we do not want to fall into the bad habit of self-sabotaging by closing our trades too early, just because we see temporary pullbacks that are taking place against our position. Natural dynamic of the market is to wave and pull back temporarily before it actually hits a target. So monitoring the market could lead us to interfere with that natural dynamic and prevent us from maximizing on our trading gains. So of course, going to be monitoring this setup and the candles on the forward chart to, first of all, to determine if we see a strong enough signal on the forward chart. If that is not given, then we would wait until the daily chart has provided us with a strong signal and enter the market then, using a stronger stop loss area that we're hoping that would have been provided by then.